Hello traders at CMC Markets. Welcome to a new update by RRG Research for Monday the 27th of November. My name is Julius de Kempenaer and I am presenting to you from Amsterdam in the Netherlands. As usual, we're going to take a look at the rotation for various stock market indices around the world and then zoom in on the New York FANG stock. Let's quickly start with the RRGs for stock markets. On the left hand side we've got the weekly RRG, on the right hand side we have the daily. And I've been looking at these RRGs for a few minutes before I started recording this, and it's interesting because if you look at the weekly rotations, they're kind of all negative. They're on the left hand side and rotating back down, this whole cluster here. And then we've got what is on the right hand side is pretty much also all rotating in a negative heading. The only two that are slightly positive are the Nasdaq and the New York FANG index. Everything else is on a negative heading. Now, this obviously is not a closed universe because we're looking against the All Country World Index, and that's obviously a lot more countries than we have here on this RRG, which is essentially, I'd say, the major markets, if I can say it like that. And the reading of this is that obviously the Nasdaq and the New York FANG are the outliers, they are the real outperformers, but that there must be quite a few smaller markets, other markets, less major markets, who are now starting to outperform, where they're falling outside the scope of this video, outside the scope of this research, but that's how you would need to read an RRG with a rotational pattern as we have at hand here. When we move to the daily version, we see slightly similar. The stuff inside the green is the Nasdaq and the New York FANG. That's interesting because they are now rolling over, so the little hiccup, the little positive move that we see here already seems to be under pressure. Nevertheless, they're still on the right hand side of the graph, so that's good. Pretty much the rest of the group is still inside the lagging quadrant. They're picking up some relative momentum, but not much, except for the DAX. The DAX is moving towards the leading quadrant, so that is a kind of an outlier. But all in all, it means that the outlook for US market, for world markets, is getting a little bit more conflicting. It's not a very clear direction, and that makes it hard to trade from a directional point of view. So that's that. Let's take a look at we're going to take a look at a few of these individual charts in a minute to give a clearer picture or a little deeper analysis on what's going on these individual markets. But the outlook here for world stock markets is essentially not super clear. It's not going into one direction, and it means that you're going to be very careful with the trades that you pick. You always have to do that, but sometimes when markets all go in one direction, you can't really go wrong. Right now, you definitely can. If we bring all of that to the 0% index, making it a absolute price trend analysis, as you know, we can see that the recent strength of the markets is still clearly visible. Pretty much all these markets are inside the leading quadrant, but they start to lose relative strength. And that is, I think, the main message of this video, of this program, that most of these markets, if not all, are running into heavy resistance areas. They are overbought. They are at the end of a big rally that happened over the last few weeks. And I think they just need to digest some of those gains and maybe retreat a little bit, maybe consolidate a little bit before there will be enough new fuel for the markets to actually move higher again. Let's have a quick look at the S&P itself, because that's what everybody's looking at, and you can see what I mean here. This was a very steep rally recently, Looking at the RSI, we're very much overbought. We're almost 80%. That's a high level, and the price is running into a resistance around 4,600. So the upside seems to be limited, and there is a bit of downside risk, and I would mark that in that gap area between 4450 and let's say 4400 for the S&P. If you go to the Nasdaq, then you can see that we're actually breaking out above these highs. It's not all-time highs, they are right here, but you can see that there is definitely an improvement taking place for the Nasdaq, and as long as we're able to stay above this breakout level, which is around 15,880, or a little bit more leeway, the gap area with support at 15,580, then I think the market is still in good shape. You can see how the RSI is indicating a little bit of an overbought area, but the difficulty with an RSI and overbought, oversold is that markets are overbought when they are the strongest. And so it's very hard to say. I mean, let's put it the other way around. The biggest rallies are taking place when markets are overbought. Keep that in your mind. Looking at the Nifty index, the Nikkei index, that is also running into resistance. You can see that right here, area around 33,700, 33,740 is a very important resistance area. So upside limited, but also the downside not too bad. The gap area here, so for the Nikkei that would be 32,900 and 33,100. Looking at the New York FANG, very much in line with the Nasdaq, trying to break out above its previous highs. It's a very steep rally. Look at this, from 7,000 to over 8,000 in about a month without any meaningful correction. That is calling for digestion, that is calling for consolidation and a market to regroup and potentially move higher. RSI is indicating overbought levels, same story as I just said with the Nikkei. But there is a bit of leeway here, so 8,000 again, you know, there's no real gap here in this chart, but I think that a setback towards the next support level, and here that is a little bit below 8,000, would probably offer good re-entry levels. Let's take a look at the stocks index. You can see that this has, I hope you agree with me, has a little bit more room to move upward. So it is good. It took out the previous high, but it is inside a way broader range than the other markets. But it also means that there is a little bit more upside potential. So for the stocks, we could be watching 465, 470, and we just took out that previous high, which is a good thing. So from a relative point of view, as you just saw on those RRGs, the Euro markets, the Euro stocks index is in better shape than the US markets. And we will also see that when we go to the DAX index, which is pushing against resistance. But in combination, if we put it in a bigger framework of European markets, and especially when I bring in the RRG lines, the relative strength, that you can see that these lines are pointing upward, whereas the RRG lines for Nikkei, for example, and the Nifty and Australia are pointing downward. Australia as well. 1, 2, 3, 4, 5 touch points now, so it's a pretty reliable resistance level. And look at the relative strength here. That is going straight down, making it very difficult for the Australian market to actually move higher. So I think there's a couple of good pair trades to be found in that space. Now doing a little zoom in on the FANG index on an RRG, and this is interesting because you saw how the Nasdaq and the FANG index as an index, as a group, were actually on the better side of the RRG. But when we now put these FANG stocks on an RRG and using the FANG index as the benchmark, you can see that there is definitely differences in the rotations within that universe. Here also a few conflicting rotations, so not a very clear-cut directional move for the group as a whole, but I think there are a few interesting stocks to keep an eye on. Looking at this RRG here, so the weekly, my eye is dragged towards Meta because it is rotating back from weakening into leading. That's always a good thing. I am watching Tesla as it is pointing straight down, and that is a super negative rotation. And I'm looking at Microsoft, Apple, AMD from a longer term positive take. If I bring that over to the right hand side where I have the daily RRG and I look at the same tails, then there are only a few that I think are worth our time and attention and possibly trading money, because they are aligning. You know that I'm always looking for alignment on the weekly and the daily, because it gives me a little bit more confidence that the rotation is actually solid and reliable. If we start with Tesla, that's a very clear negative rotation. And if I look for the Tesla tail on the daily chart, you can see that it is inside improving, but about to roll over. It picked up a bit of momentum, but now it's just moving sideways and not picking up momentum anymore, which makes it prone for rolling over when it starts to lose momentum. And if that happens, then you will see that Tesla will rotate back downward inside the improving quadrant, heading down towards lagging, and then it gets back in line with the weekly tails. The other one is Meta, and Meta is looking pretty strong on the weekly, but when I look at the daily RRG, then Meta, and it's hardly visible. Let me switch off Apple because they're very close together here. And you can see how Meta has just rotated from weakening into lagging and now started to move at a strong heading again. So this is getting in line with the Meta tail on the weekly. Let me bring back Apple and switch off Meta so we can see what's going on there. And you can see how Apple is a little bit trailing the Meta tail, but still starting to hook back up. You see how that tail is shrinking? That means that the momentum is gone, the power is gone, and you see that arrow starting to point up. And if we look at the tail of Apple on the weekly, you can see it's still a little bit further to the left, but it's heading at the strong direction. So I prefer Meta over Apple for the time being, but I'm definitely keeping an eye on the Apple tails, because when Apple manages to continue its rotation on the weekly tail and pick up on the daily, this is one of the mega cap stocks, one of the drivers of the US markets, one of the drivers of the FANG index. That could be a good sign for this group to start performing better as a whole. And then finally, maybe we need to look at Amazon, because Amazon is in the consumer discretionary sector, and the consumer discretionary sector is really under pressure because Amazon is one of the bigger names in that group, of course. And you can see how the weekly tail is pointing at a negative heading, moving towards lagging. And the same was happening with the daily tail. It's very close to crossing over. And my big question mark is whether this daily tail, and you can see how it's starting to curl up, will be able to pick up and rotate back up and maybe drag this one up, or whether the weekly tail is leading and it will eventually push the daily Amazon tail into the lagging quadrant, and we will see a further underperformance for Amazon within the group. Let's have a quick look at some of these individual charts. We spoke about Tesla. Tesla, you can see here that the RRG is bending over, and I've labeled in here a new declining channel as it looks, and there's a lot of overhead resistance. We're currently in that resistance area coming from that gap and heading up towards that falling resistance. So the upside potential for Tesla is not too much, and within that channel it's quite a bit of risk to the downside. If we look at Meta, that looks a lot better. You can see how these RRG lines are closer to 100 and they're starting to move back up. That's the rotation on, this is a daily RRG, so this is the rotation on the daily that's actually starting to pick up again. And if you look at the price chart, we just took out some overhead resistance and we're getting close to a longer term resistance level, which is around 350. Currently we're around 340, but from a relative point of view, this is actually doing pretty well. And then Apple as the leader of the pack. You can see how we're taking out that overhead resistance. There is a bit more upside to be gained here. So upside potential definitely there. From a relative point of view, on the weakening side, but potentially, and that's the caveat, the like what if then, etc. That starts to move higher. That would be the sign for Apple to become more of a leader. But look at this trend here is pretty much in line with what we saw with the FANG index and the NASDAQ, almost a straight line up. So we're at very high levels in terms of RSI. We're in a resistance area. Again, from a relative point of view, if Apple holds up, very good. From a price point of view, the entire group is probably under pressure. And I think that's the most important takeaway for now, that stock markets around the world are running into resistance areas. They're under pressure, at least for the near term. And the same goes for most of the FANG stocks. They're running into resistance areas. I'm going to leave it at this. Thank you for watching the show. I hope you enjoyed it. And I'm looking forward to seeing you again at a new update by RRG Research next week. Same time, same place.